What's up, fam? All right, here we go. So let's start off with the daily right here. Um, we broke out of this consolidation this week over these past 5 days. Um, right here, as you can see, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days of consolidation. And as we learned in the core content month one, everything starts with consolidation, and from there we go into expansion. Because this is a daily consolidation, I kind of expect the expansion to reach probably above September highs, is my guess. I don't think it's going to rip up like this, like a high impact news event, but I do think we're going to have a lot of these overlapping, just steady run up into these September highs, seeking that buy side liquidity up there. If we kind of open this up a little bit, here's our weekly bias, power of three. We started Monday, we ran up and we closed down here. Tuesday came down and we closed higher. Wednesday up, Thursday retraced up higher. Friday retraced and closed that high of week. And so if we look at that weekly candle, this is what you're going to see. A nice open, manipulation down, weekly runs up, distribution, and close. So here's a nice weekly big green candle, power of three. So if I was to give my bias or my sentiment moving forward, again, I think we're going to get up and take out these September highs up here and this December high. All right, let's move down to a 4-hour chart. Okay, here we go. So a couple things to note on the 4-hour chart. We have relative equal highs up here. I like seeing this because this tells me that this is going to be a liquidity area that it's going to want to break above. If I was to give my thoughts on where we're going to head next week, I think we probably make a move and get into this daily fair value gap, taking out this sell side liquidity, and then working to get above these equal highs right there. I could be wrong. This could be saved for a later date, and we might not even come back down to this area anymore. But the next couple weeks in January, we do have some high impact news coming up. And so that's always a possibility of a driver to send it down there just to grab that and then shoot it right back up. All right, moving on down to the 1-hour chart. All right. Okay, so again, we have those relative equal highs. Something that I want to note on the 1-hour chart is see these candle bodies right here? So I can't recall off the top of my head what video it was from, but ICT mentions that when you have candle bodies, and even though you have this wick down here, look at the candle bodies from today's price action. They break below these candle bodies. So this technically was a liquidity grab because this is just completely unbalanced. It's a wick. So as price breaks below these candle bodies, that was the liquidity grab. And that was from our London session coming down overnight, 1 hour of consolidation, and then we had a steady trending day up and we broke yesterday's high. Okay, moving on down into the 15-minute chart. All right, so on the 15-minute chart, here's the central bank dealing range, the CBDR. So that was from 2 o'clock, 1400, all the way to 8 o'clock, 2000 New York time. And if we take one standard deviation, you see that this 1 standard deviation below, and price reaches right down into there perfectly, and that's where it consolidates. So we opened here, Asian session, and then what happened with London? It kind of went up, but it just consolidated. It did not break the Asian session high. What that tells me is London's either going to set the high or the low of the day. So because it didn't break the Asian high, then what is it doing down here? It's setting the low of the day. So what can we expect? A reversal and New York to at least take out Asian highs. And that's what we had. Nice down, consolidation, trend up, a small retrace. If you look at this candle right here, the high of this candle is going to be 39.85, and the retrace low of this candle is going to be 39.85, and that's perfectly balanced. All these overlap down here, and so it's balancing all the way up. It brings it back down here to rebalance this little gap right here. It touches perfectly and matches, so now this whole area is balanced, so it doesn't need to retrace farther, and it doesn't need to retrace again later in the day. It can continue to work to where its end target is, which was previous day high. All right, going down into a 5-minute chart. As I mentioned in the forum, we have 8 o'clock right here, and we have 9:30. So between 8 o'clock and 9:30, it consolidates. That's an hour and a half of where price doesn't try to reach down into this daily fair value gap. So what that tells me is that price is not going to reach down in there, because as we all know from ICT, time is the first variable. So when something hangs out for about an hour and a half, that's telling me that no, it doesn't want to get down to that next area because it needs this time to get all the way back up here where it ended up going. Let's go down to the 1-minute chart. Okay, now let's look at the bread and butter setup for the day. Scroll over here, open this up a little bit. Okay. Okay, so again, you can see here the consolidation as it came down from the London Open, first couple hours of that, and it comes down. It's distributing all those sell orders and sequencing to build up buy orders. New York opens, and we have this consolidation movement right here. Everything's real tight. There's no breaking away and breaking below these prices. It didn't even come down below this swing low down here. And it breaks out of this consolidation with these two candles moving up, pretty expansive. Okay. So then with those two candles, it breaks out of the consolidation. We get a fair value gap created right here. And we get our optimal trade entry right here. So this is where you could have taken a long position. We did have a high impact news with consumer sentiment right at 10 o'clock. This gave us a very large candle with wicks to both sides. It touches the top of the fair value gap. It's dead even with this candle right here. This candle's low is 39.7550, and this candle's low is 39.7550. So this was your entry. You could have added right here. And now let's look left. So right away, we already have 3 swing highs. Okay. So we could have gone long right here with optimal trade entry. You could hit this first point, which is 39.85 or 39.89, I'm sorry, from 39.75, and that is a 14-point move. You can offload about 50% of your positions right here. We had equal highs right here. You could offload another 25. And then we have this prominent swing high right here, which gets broken right at here, right before we start the retrace. And you can either take off the rest of your shares, or you could take off everyone but one and leave a runner knowing that it's a good possibility that we're going to break above the Asian session. But that right there is a 14 to 20 point move. So 39.96, 39.75. 20 points with 5 cons, you're looking about 4 to 5K on that move. So really simple setup with this fair value gap created, optimal trade entry in here, and that would have taken you from 9:30 New York Open to 10:30, 1 hour, 4 to 5K, not bad. All right. Let me go back to 1 hour chart. I can't remember if I mentioned this. I don't know why auto sets me way back there. It's kind of ridiculous. Should take me to current time. Yeah, fair value gap, daily fair value gap hanging out down here. Not sure if we're going to touch that, but I'm just going to note that as a point of interest with these relative equal lows right here. And then the buy side, sell side liquidity right here. So 2 sell side liquidity points with a daily fair value gap that could launch us out. And that also gives us the optimal trade entry to go long. So if we do make it into this daily fair value gap, here's a little pointer. Might be able to swing some SPY calls for a couple days, or something that follows SPY pretty heavily, like maybe Google or Amazon, something like that. Just things I think about. But other than that, hope everyone has a good weekend. Hope you learned something, and hope this was helpful. All right, you guys take care.